एक बार।
ब्याज, इंटरेस्ट।
लोन पे तो इंटरेस्ट बैंक हर महीने लेते हैं।
लेकिन सेविंग्स अकाउंट में इंटरेस्ट देते हैं 3 महीने में एक बार।
ऐसा क्यों?
एयू बैंक के सेविंग्स अकाउंट में इंटरेस्ट मिलता है हर महीने।
मतलब साल में 12 बार।
एयू बैंक, बदलाव हमसे है।
Presenting 2 new tech initiatives in the retail microfinance sector. Sahyog 2.0 app to ensure data security and efficient services with newly added features like eKYC, geo-tagging and instant credit verification. And cashless payments of EMI via any bank UPI for easy and safe transactions. All this with an aim to enhance last mile efficiency and delivery for the microfinance entrepreneurs.
जिंदगी के कई मौसम अनुभव किया मैंने। हालात बदले, लोग बदले, अगर कुछ नहीं बदला तो बाबूजी की सिखाई हुई एक बात, वो कहते थे जब नींव मजबूत हो तो फिर चाहे वक्त के उतार चढ़ाव कैसे भी हो, हम उनका डट कर सामना करने में सक्षम होंगे। बिल्कुल इस पेड़ की तरह ऐसा ही एक अटूट रिश्ता जोड़ता है आपके साथ आईडीएफसी फर्स्ट बैंक। विश्वास, पारदर्शिता और सच्चाई का, क्योंकि इनको आपकी सफलता में अपनी जीत दिखती। मैं तो जुड़ चुका हूं इनके साथ, आप भी जुड़ जाइए ना। आईडीएफसी फर्स्ट बैंक, ऑलवेज यू फर्स्ट।
प्रयास लोन, सिडबीज डिजिटल प्रयास पार्टनर जर्नी। आइए देखते हैं इस डिजिटल इनिशिएटिव की जर्नी। इस इनिशिएटिव में पार्टनर इंस्टीट्यूशन के माध्यम से सिडबी के द्वारा लोन प्राप्त किया जा सकता है। सिडबी की प्रयास स्कीम की मदद से अपना छोटा व्यवसाय शुरू करने के लिए उद्यमी पार्टनर इंस्टीट्यूशन के ऑफिसर से संपर्क करता है और उसके केवाईसी डॉक्यूमेंट और बेसिक लोन इंफॉर्मेशन लेकर पार्टनर इंस्टीट्यूशन का ऑफिसर प्रयास ऐप में लॉगिन करता है। उसके द्वारा कस्टमर का आधार नंबर डालकर कस्टमर के केवाईसी वेरिफिकेशन की प्रक्रिया की जाती है। पार्टनर इंस्टीट्यूशन लोन डिटेल्स और बेसिक इंफॉर्मेशन के साथ ही इनकम एक्सपेंडिचर इंफॉर्मेशन भी फिल करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑनलाइन ब्यूरो से डाटा प्राप्त कर आगे की प्रक्रिया शुरू करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑफिसर लोन एप्लीकेशन को पार्टनर इंस्टीट्यूशन चेकर के पास भेजता है। पार्टनर इंस्टीट्यूशन चेकर डाटा को वेरीफाई कर लोन एप्लीकेशन को सिडबी में फॉरवर्ड करता है। सिडबी लोन ऑफिसर प्रयास ऐप में लॉगिन कर डाटा वेरीफाई करता है और सैंक्शन करने के लिए सिडबी चेकर को भेज देता है। सिडबी चेकर डाटा चेक कर लोन सैंक्शन कर देता है। अब पार्टनर इंस्टीट्यूशन लोन ऑफिसर डॉक्यूमेंट्स की ई साइनिंग और ई स्टैंपिंग की प्रक्रिया यानी प्रोसेस शुरू करता है। इसके बाद कस्टमर और सिडबी ऑफिशियल को एसएमएस और ईमेल द्वारा एनईएसएल से डिजिटल डॉक्यूमेंट्स का लिंक प्राप्त होता है। कस्टमर लिंक को ओटीपी द्वारा खोलता है और उसके बाद निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड हो जाते हैं। इसी तरह सिडबी ऑफिसर भी ओटीपी डालकर लिंक खोलता है और उसके द्वारा निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड किए जाते हैं। अब पार्टनर इंस्टीट्यूशन लोन डिसबर्समेंट रिक्वेस्ट इनिशिएट करता है और पार्टनर इंस्टीट्यूशन चेकर इसे दोबारा चेक और अप्रूव कर सिडबी को आगे भेज देता है। सिडबी ऑफिसर दोबारा डिसबर्समेंट रिक्वेस्ट को वेरीफाई करता है और सिडबी चेकर लोन अमाउंट और अकाउंट डिटेल्स वेरीफाई कर लोन अमाउंट बेनिफिशियरी यानी लाभार्थी के खाते में क्रेडिट कर देता है। इस तरह बड़ी आसानी से सिडबी और पार्टनर इंस्टीट्यूशन के माध्यम से बहुत ही कम समय में लोन प्राप्त कर छोटे उद्यमी अपनी जीविका का साधन अपना रहे हैं। प्रयास ऐप से अपने प्रयासों को सफल बनाएं। सिडबी आपके साथ है, सिर्फ एक प्रयास की बात है।
क्या है जो आता हुआ अच्छा लगता है लेकिन जाता हुआ नहीं?
एक और हिंट, ये चीज जाती है हर महीने पर आती है 3 महीने में एक बार।
ब्याज, इंटरेस्ट।
लोन पे तो इंटरेस्ट बैंक हर महीने लेते हैं।
Hi, a very warm good morning to everybody who's logged in. I'd like to thank each one of you for joining us for this very important opening plenary, which is aiding recovery, building resilience, policy, regulatory, and industry responses. We have had a very overwhelming response to the summit already. We have over 1,700 registrations, and we are very grateful for everybody who's taken the time and logged in. So to start off today's discussions, we have with us a very special guest, Mr. V. Vaidyanathan. While he needs no introduction, he is the MD and CEO of IDFC First Bank. He formed Capital First, which was then finally merged into ICICI Bank. And I don't want to take too much time introducing him. I would request Mr. Vaidyanathan to please join in and give us the opening address on Towards an Inclusive Ecosystem, the Last Mile.
Okay, good morning, everybody. It is really a great pleasure and privilege for me to be here with all of you at the inaugural session of Inclusive Finance Summit by Access Assist. So thank you very much for being here and for inviting me. I actually put together a quick presentation for you, and I'm just going to flash it for you, then we'll start conveying. Just help me with the share screen.
And this one.
Okay, here we go. Okay, this is my subject for the morning. The key subject that at least I thought was relevant here is that how do we create an inclusive ecosystem that will then come back to help inclusive financing across maybe all categories of financial services needs of customers. And then, we take a few challenges. I feel that India's covered a lot of ground, but there are challenges. We'll talk about that. Now, to kick this off, let me just share with you a quick story about a visit that we made to a village. And this village was largely about the milk economy. And this is a village of about 600 people, about 100 families. And you can see, how warm these people are when we go there and we meet them. And they had put up the shamiana and they explained to us that entire ecosystem, how the economics of the milk economy works. I'll share more about that later to you. You could see that, the village gathered here, maybe about 50 or 60 people in the audience. And you can see that this small child actually went to their home. And I think that gentleman, there's probably his father. And I asked this kid some, very interesting questions about, just some questions about, I asked him to tell me tables of 5 or 6, and I asked him, some quick numbers about what is 8 plus 15 or something. And the guy was very quick and like he spoke super fast, and he shocked me, surprised me with his speed. And, he wasn't, of course, in vernacular, which is great. Then you could see the ecosystem here. This is a discussion on the economy. I'll show you a video later, so I'm not going to spend time on this slide. And then I asked them, how is this village operating? They said in the last 5 years, they're seeing serious amount of roads getting built. Maybe in the urban area, we've not seen so many roads here or there, whatever, but I can tell you, rural economy, road connections are getting fantastic. I asked them about the villages, about school. They said there are 3 villages, all of us attending a common school. The amazing thing was they said the government school are better than private schools. At least the 3 guys who spoke said that. And they said the quality of midday meals was good. They said a bicycle in higher grade, roads are better. Toilets, they were very proud about the toilets actually. And I tell you, the Swachh Bharat is truly working in my mind from what I saw. We even talked about rotating crops to maximize profits. I mean, normally they make about 10,000-12,000 rupees per family, but this guy was making 50,000 a month. Then they said, look, in a village, actually, whatever 10,000-12,000 they make a month is okay because their expenses are not that much and they could manage. This guy had taken a housing loan of and paying an EMI of 5,000 a month. This guy made an interesting comment. You'll hear that in the video. He said, "Paise se paisa banta hai," and that is a very key point. I was so tempted to this comment that I almost wanted to make this a subject of my speech. But maybe you can get the spirit of what I'm saying. He says, "Paise se paisa banta hai," and it was a very telling comment. Paise se paisa banta hai. And then I asked these people, how many have taken a loan from a bank? I was really proud. You can see the hands going up. They said so many had taken a loan from our bank. And I will tell you how we go over this process later. How many have taken a loan from a bank? You see it here. Of course, I shook the hands for taking it from us. Then insights from locals, they were wonderful, as you can see in the video. And you can see that here, they were just giving us a nice meal and they were just really wonderful. Now, I want to just show with you that we went and saw their biogas. They're not even wasting dung. They're actually taking all the dung, putting it and making a biogas. We have financed that biogas. So thank you, note. And I'm going to show you a small clipping now, and then we'll take it from there. This is sharing. Sorry, you said something?
लोन से एक सुविधा है पैसे से पैसा उसका व्यापार है सर। तो उसके क्या है कि आदमी का दूध से पैसा बनाता है, जानवर उसके चलाते हैं। हमारे बैंक से आप में से कितने लोगों ने कर्जा लिया? सर करीब करीब यहाँ कम से कम 15 सदस्य है, 15-20 सदस्य हमारे बैंक से। आप सभी हाथ में IDFC से लिया हुआ, आप सभी ने IDFC से लिया हुआ है। IDFC से किस चीज से यही है। और किन्होंने हाथ उठाया था? आपने भाई साहब किस चीज का लोन लिया हमसे? अच्छा, दूध के लिए मतलब क्या है एक्चुअली? प्रॉफिट अच्छा होता है, प्रॉफिट अच्छा है। बैंक से लोन लिया, आपने लोन लिया 1.5 लाख लिया, तो आप 1.5 लाख का क्या किया आपने? जानवर लाए, जानवर लाते। तो एक गाय कितने का आता है? 30,000, 40,000, 50,000। एक गाय 25-30,000 का, 40,000। अगर हमने आपने कितने लोन लिया आपसे? कितने गाय खरीदे उससे? 3 गाय घर पे भी आता है। ठीक है, तो 3 गाय खरीदे आपने। एक गाय कितना दूध देती है? 6-7 लीटर दूध देती है एक गाय देती है। और कितने में बिक जाता है? 6 लीटर कितने में बिक जाता है? तो 40 का भाव हो जाता है। तो 40 गुना 6 तो 240 रुपए। वो पूरा अपना हो गया। वो एक गाय से आता है। और कितने महीने में कितने दिन दूध देती है? पूरे साल चलते हैं, दोनों टाइम देती है, सुबह शाम। लेकिन वो दोनों मिला के बताया ना, एक टाइम का बताया। तो दोनों टाइम मिला के कितना? 12 लीटर। 12 लीटर। तो 12 दुनिया 40, 480 रुपया दिन का आता है। एक गाय का। बट सर उसमें खर्चा भी है। अभी आता हूँ। इनटू 30 दिन कर लो। तो 480 रुपया गुना 30 तो 530, 15,000 तक कमाई हो गया एक गाय से। और 15,000 में खर्चा कितना हो जाता है? गाय को संभालने में, खाना पीने में 5-6 हजार एक गाय पे। तो 15,000 में 6,000 रुपया बचा 9,000। ठीक समझ रहे हैं? 9,000। तो गाय का अगर आपने 40,000 में गाय खरीदा है और एक महीने में हमारा खर्चा काट के 9,000 बन गया, तो 4-5 महीने में उसको पूरा पैसा आता है। और इतना डिमांड है दूध का। डिमांड तो बहुत है। अपना दूध कहाँ देते हैं? इंदौरी खरीदते हैं यहाँ पे। तो अच्छा, ये पूरे गांव का दोनों खरीद लेते हैं। यहाँ से हम दोनों कलेक्शन कर देते हैं।
I want to just pause there and, if I request you to just reflect on the conversation, you see, most people in rural locations, people who are borrowing small loans of 50,000 rupees, or in this example, he was borrowed 1.5 lakhs from us. They are honest people. They really mean to pay you. They are semi-literate. You can make out, they can have smattering of English, but really only 12% of India speaks English. They use mobile phone, but usually a bit of feature phones. Very enterprising people. I mean, I can't tell you, I spent about 3-4 hours with them and had even a meal with them, and they were like wonderful. So I can't tell you the amount of, I can't describe it for you. And when you see them and talk to them, the needs are like us, as well-off people in urban India, like us, literally. For example, we have needs for payments, we need to spend, they have need for payments. We have need for savings, we need to park our money somewhere, they have need for savings. but it is harder for them because branch is not close, and there is BC, and BCs are not exactly BCs are good job, but end of the day they are charging money for depositing money in the BC account, 5 rupees, 10 rupees, and all that is effective material for them. We have need for investments. They have need for more investment because end of the day they need to park the money somewhere and get a better return. The poor people anyway. We have at least mutual funds, AIF, and all that kind of stuff. They don't. We have need for insurance. They have more need for insurance because their safety net is not there. At least we have a safety net in our lives. We have need for borrowings. They have need for borrowings more than us. In fact, they're getting at 20%, 22%. We are getting at 7%, 8% for home loans, and maybe 6.5 now. So the point is that across the board, the needs are similar, just that everything is expensive for them. And this is not the only thing, air conditioners, anything, whether it's sachet or electricity or interest rates, everything is expensive for that ecosystem. So needs are there. It's expensive. It's like how Mahatma Gandhi said, poverty is the worst violence of all. It is definitely true because that's the kind of ecosystem they live in. Now, but they're enterprising, they're honest. They're all God-fearing. I'm not saying God-fearing people are better or worse. That's not my commentary. But the point is, at least they have the philosophy that they got to pay back, and there's someone watching them, and and they pay extra everywhere because that's how the unit cost economics work. Now, in this circumstance, now think of COVID. Now, when COVID came, these people are even more affected because everything around us digitized. So all over the ecosystem, we are finding, articles all over net saying that how COVID has digitized India and all that, which is all true, by the way. We've seen that, UPI numbers, 100 billion per month and all that. But the thing is that while that has happened, the fact is that, and you can see doctors have become e-doctors, shopping has become e-shopping, commerce has become e-commerce, social commerce, education has become e-education. That's all true. But one key insight I found when I was speaking to my driver the other day, and the guy who drives me around every day, I asked him, how do your children study? He said they're studying on the mobile phone. Now, I really can't scratch my head how to study on a mobile phone because, the screen is so small. We can't see it for more than half an hour, 1 hour. We say we want a break and all that. But how can a child see on a mobile phone? And I want to show you this small clip out here. And I want to, drive home a point after that. So now you move ahead from this slide, from this story, and then I want to see how this child is studying on a mobile phone. This is a boy probably scratching his head, not feeling good for him, and peering so close into the mobile phone. It's very hard. Look at these two children studying in the same room, and they struck the mobile phone. By the way, it's not, India has 300 million feature phones. You don't even have this facility on that. And think how you can see a Teams call with 20 icons there. It's hard, very hard. And then this child has a laptop, and she should thank herself. Probably she's thanking. I don't know if she is. She's not. But you see, at least this person has a laptop. But if you see if 500 million in India children are studying like this, if at all, it's very hard. Now the last mile connectivity, the instrument, India has digitized. This is the point I've written it up for here. Education have picked up. Education moved online, yes, but poor don't have laptops, true. So can you do a Teams call on feature phone? No. Now assume you have a feature phone. Can you really see a Teams call 10 parts with mobile scroll? No. How effective is e-education to them? Then the gap in learning only increases. Now, obviously, this child after 2 or 3 years is never going to catch up with this child. And then the impact in earning is lifelong. So this is an issue of the last mile problem, and that is why I named my presentation The Last Mile. And this phenomenon is carrying over industry after industry that are all moving online. Now, therefore, I'd like to, just within the next 5 minutes, if I have time, I'm just going to close this with 3 subjects I want to talk about. The last mile problem, the vernacular problem, the cash economy, and the spin-off benefits of a digital economy in inclusive financing. So I want to stop my presentation here, but I want to just talk you through it now. If you think of this discussion with these villagers and all this stuff, and by the way, these are like close to about, let me say, I must have had these kind of conversations, and my teams have, with maybe about 30 or 40 such industries, and talked to many people. They are still dealing in cash. I don't know what the Inclusive Finance Summit is going to talk today. And of course, digitization has happened, UPI, all that. But I can tell you a large part of the ecosystem is running in cash. Okay. And I'll tell you one more thing. Look at microfinance industry. Microfinance industry has something like about 60 million unique customers and probably about 100 million accounts. The Indian ecosystem has moved to giving them credit in their bank accounts digitally, which is a big leap, big leap forward. Of course, earlier when that was in cash. But every month, these people, or not every month, maybe every week or a fortnight or month, depending on the respective MFI company or bank, these people are repaying in cash. Now, when you're repaying in cash for a 2 lakh crore or 2.5 lakh crore MFI market, and considering it's about 1 year loans, typically, let me say about 20,000 crores per month is coming back in cash from these people to be paid to the lenders. And someone should physically go there, count that, total that, tally that, recon that. You ask these people, why are they still paying in cash? They are saying that their income is in cash. So I asked them, why is income? If your income is in cash, then why do you have to pay through your, why don't you deposit in your account? Because BC charges money, not all, but there's a price. So therefore, when we, when imagine a time when people sit together, probably just pay through UPI instead of paying in cash, how much the whole, this ecosystem is going to change. Therefore, to digitize the rural India is going to be a prime importance. As I talked earlier, the last mile connectivity, the tool or the instrument is going to be of extreme importance because you're not going to reach the last mile, and some definite intervention has to happen because market economics will not solve this it will solve it, but I guess it will take much longer. And we had a home and everything has been an intervention for the right reasons like that. Got to figure out the last mile intervention. Then the moment that amount of cash economy of either rural or even urban poor comes down, the impact, let me just frame that picture for you. Today, when we see, our urban markets and even let me say, middle class, upper middle class, etc. Now bank accounts are now digitized. Now cash flow is all disclosed very well. Now, therefore, some entity is able to scrape that information digitally. They're able to now analyze this information digitally. You're able to give cash flow based lending. That ecosystem is dramatically opened up. Then we're talking of AA, account aggregator. We're talking of AI ML capabilities for scraping that information. We're talking of Open. We're talking of LSP. I mean, this place is truly humming with activity and dramatic things are happening. But when that power of that ecosystem that's coming up in urban India, when that transports itself to rural India, dramatic things really are going to happen. And if you think and talk to these people already, the cow dung is being replaced by maybe LPG, not maybe, by LPG, the candles in diya outside the homes are now getting replaced by electricity. Electricity has reached a lot of places. The hand fans are being replaced by fans, in some places even coolers. Names are being changed, not changed, but names are being they're not name. Now biometric is a real good identity. Informal village reputation is already becoming, let me say, the bureaus are a better indicator than probably systemic indicator for replacing the reputation of the person in the village. So lots of dramatic things are happening out there, and that augurs well. But if you combine all these dramatic things along with taking out this cash economy and replacing it and being able to analyze the data, etc., so the entire fintech ecosystem, everything will move, can move rural, and that game can dramatically change. Then from there, after that sort of digitalization and cash economy being replaced with the digital economy in rural, mind you, I believe it's very, very powerful. With that, then imagine then they can start investing in the stock markets. Even imagine if poor people start investing 100 rupees as a SIP per month into a stock market, what kind of investment opportunities opens up for them and for what it means for India. Imagine if they start getting insurance and a little more, much better insurance. Now government is frankly giving them very good insurance through that. I think Pradhan Mantra Jeevan Bima scheme, but it can become even more market economics. So this whole thing of being able to get the last mile problem solved, to get the digitization of the economy going in a very big way in the rural India, that has dramatic impacts on what it can do. And third, vernacular. We are talking in this program, we're probably 12% of India, and maybe 88% of India wouldn't understand a word of what we spoke today. So, the power of vernacular, I believe that if you put the three pieces together, there is a mega things coming, and frankly, new markets can open up from there because think about it. Today we do MFI. MFI was a big, first principles thinking from traditional lending. But why MFI only for women? You can open a new market if you did MFI group borrowing for men. Or men and women, mixed genders. Frankly, that could be another 2.5 lakh, another 3 lakh crore market, 5 lakh crore market opening up there, and can seep into the grassroots. So when newer forms of ecosystem can open up to sum it up, whether it is borrowing, savings, investments, insurance, whatever. In all of these segments, basically with these three factors of the last mile and the other two things I talked about, the digitization and the vernacular, these three put together can just really open up really big things. I mean, we've been traveling to many of these places. We just feel that it's like insanely, the opportunity is fantastic from business point of view, and the social need is crying, and we need to, any amount of intervention we do to address these two or three things will really help. So that's my quick take for comments I want to leave with you. There are opportunities, there are challenges. I just hope all of us work with post haste and do as many interventions as possible to crack the system open. It's good for India, good for everybody. Thank you. Thank you very much. That's all I want to share with all of you.
Thank you, sir. Thank you so much for highlighting these very important points while we kickstart deliberations for the Inclusive Finance India. I think this has set context and tone for the discussions that come forward. With that, I'm very happy to introduce a well-represented panel, which will be moderated by Ms. Jennifer, who is CEO Catalyze Global Impact LLC. Welcome, Jennifer, and the panelists. The panelists for today's session are Mr. R.B. Santosh, Head Government Engagement South Asia Mastercard, and Mr. Shaji KV, DMD NABARD. Mr. Ajit Pai, unfortunately, will not be able to join us for today's session. So with that, Jennifer, we hand over the charge to you, and we look forward to a very insightful discussion.
Wonderful. Thank you, Priyambada. And thank you, Mr. Vaidyanathan. I think you've given very insightful opening remarks to introduce our panel. So I'm truly honored to moderate this esteemed panel with Santosh Kumar, the head of MasterCard South Asia Government Engagement, and Shaji KV, the Deputy Managing Director at NABARD. I think we're going to have a really interesting discussion. Financial inclusion, the progress across India, urban and rural, is among the most impressive globally over the last 20 years. Tremendous progress and incredible interaction, and I think good synergies from the public and private sector initiatives, from government, from the RBI, from multiple private sector players in the meso or infrastructure level of the financial sector, and definitely from all of the financial services providers, of which it's just blossoming and has been over the last 10 or 15 years. That said, the last 2 years have really been quite a roller coaster, and we've all, I think, experienced a very deep impact around the world, and certainly in India, of the impact of the lockdowns that have triggered trade shocks, travel restrictions, migration that was unplanned, job losses, job reductions for those lucky enough to maintain their jobs in the formal or informal sectors, inflation in some areas, in some sectors, and overall economic dislocation. We're really living in historic times and surviving together, I think, as a globe through this pandemic. The government has definitely responded with key mitigation initiatives, including tremendous fiscal stimulus of over 20 trillion rupees. And the RBI has enacted expansionary monetary policy and remained absolutely vigilant in their financial supervision and ongoing shepherding of the financial sector. And yet, financial institutions have really been hanging on, doing their very best with reduced staff under these travel and mobility restrictions and gathering restrictions, and really doing their very best to serve their clients over these last 2 years. And they haven't always been able to fully access the available funds, government funds and other funds from emergency windows that were opened, so that they could on-lend and really meet the surging demand for emergency funds. Our panel is going to discuss these public and private sector activities, responses, and what's needed looking ahead to really help rebuild, help India recover for both households and businesses in urban and rural areas. And what really is the role of an inclusive financial sector in this recovery that we all are hoping will emerge, that we can build together in 2022. So as I turn to our two panelists, I'd like to ask both of you the same question. I have two questions for you, but we'll take the first here. So given this backdrop of what we've been living the last 2 years, when do you see economic recovery being realized? And what should be the priorities for the public sector to promote a timely recovery? And let me first turn to Santosh, and then we'll open up the floor to Shaji, and then for the next question, we'll flip it around. Over to you, Santosh.
Thanks, Dr. Jennifer. So if you say, when do we see the economy recovering? I think I'm 100% optimistic that the economy has started recovering already in India, and it's thanks to the vaccination drive that has built a lot of confidence in people. The kind of medical support people have been getting against the fight against COVID, and people are, you can see now people are traveling, they are traveling for festivals, they are traveling, meeting family members, they are traveling for work, airports are full, people have started going back to office. There's a lot of improvement in the consumer and industry sentiments. So I think if you ask me, we are back. I mean, it's on the recovery path and things look very positive. All of us, wherever we travel, we can see a lot of people, there's that optimism. And I think the vaccination drive and the measures the government has taken to control COVID has really, really helped. So coming to your other part of the question, what public sector support is required, what things more can be done? Government of India has already introduced a lot of initiatives to help the affected communities, the marginalized people, the poor people. And this really is helping recognizing the potential for economic growth and poverty alleviation, and is really helping drive inclusion in the society. And there are a lot of measures the government has taken, which I would want to list here, which are good steps. One is supporting the poor people with no-frill accounts, bank accounts, where they can maintain minimum balance, minimum deposit. This is really helping them get into the banking sector. They're getting into the ecosystem because of that. They have simplified the KYC requirement for opening a bank account. Aadhaar card, which today most citizens in India have, even in the rural area, most of them have Aadhaar card. That is being used as a KYC document for your this proof and for your other details, date of birth and other stuff. Government is working on a PIDF scheme, which is the Payment Infrastructure Development Fund. It's an initiative RBI is working together with banks and the card networks. This will provide a lot of impetus for developing the payment ecosystem and acceptance in tier 3, tier 4, tier 5 cities in northeastern areas of the country, which today do not have a very improved acceptance ecosystem. To what Mr. Vaidyanathan said in the beginning, inclusion is very, very important. And how do we get to the last mile? So that's something that we are looking at. Even the regulator is planning to have UPI facility on feature phone. So this will really help people in the rural area who have feature phone to process payments, and other kind of transactions can happen on the feature phone. So these are some steps they're doing. Other areas that I think would be important would be to accelerate the democratization of technology. And there should be significant opportunity to design and develop technology solutions in India, but it should not be just for local use, but it should also be for export to other nations with similar needs. That's one. Second, sophisticated data analytics and artificial intelligence tools to become widely available for people across India. That's something that will be required going forward. Then access to global supply chains. So we should have a right mix of policy and infrastructure to enable small business to produce and to scale competitive and high quality and bring more predictability and stability with processes. The other things should be predictable and stable regulatory system should be there in the country. The approval process should be easier. There should be easier regulatory process, single window concept, which will help these people get into the ecosystem smoothly and do a lot of good work. The other thing is enable digital trade. So given the pandemic is a related slowdown of the flow of goods and people, digital trade has been a lifeline to keep the economy moving. So what is it that we can do to encourage digital trade, digital transactions, enable Indian companies, Indian startups to offer solutions not only in India, but also worldwide, internationally. Also to have a right tax reform, data flow regime, global interoperable standards and policies, and accompanying regulatory frameworks. These are my take on this, Jennifer.
Terrific, Santosh. Thank you. I think you've really started off this issue very well, and I completely agree. We've seen tremendous response from the government, and still future priorities. I like your phrase, democratizing digital financial services. I think that really sums it up well for households and small businesses. So Shaji, turning it over to you. What's your take on this question?
Yeah, so I also generally concur with what Mr. Santosh has told. We are already on the path of recovery. Yes, the data shows that we are growing at around 8.4%, vis-a-vis contraction of around 7.4% a year ago. And one point to note is that we have not still reached the pre-pandemic GDP level. That is one area which we are lacking, but we are soon to reach there. So globally, the trend is that it is moving towards a multipolar world, with the power center of the global economy is shifting towards Asia, and India is expected to play a large part. So for that to happen, India has to grow fast, and Indian growth has to be very inclusive. Otherwise, there will be problems within the country. As you see the factors, the consumption demand and the investment demand in the country was lagging. Of course, it was the adversities were more due to the COVID influence as well. So now a lot of monetary initiatives have been taken, but I feel that monetary initiatives have got certain limitations. Now the fiscal initiatives have to kick in, and government is already taking a lot of steps to revive consumer demand and also investment demand, especially in the private sector, and government is also chipping in with a lot of initiatives. So now the government is also taking steps to ensure that this growth is inclusive. For that, you all know the rural employment guarantee scheme has been augmented, food support has been given, so that people are having excess money in their hands for other purchases. And then you see the agriculture sector, the recovery is visible. In fact, the economic recovery is led by the agriculture sector. Consecutively, we are showing positive growth in that. Production has improved, so area sown has improved, productivity has improved. So now, whatever the surpluses have been generated in agriculture has to create jobs through some setting up of enterprises at the farm gate, rather than shifting that to the urban centers, because migration has happened and a lot of people are now in the rural areas. We need to provide jobs to them. For that to happen, a lot of farm gate infrastructure need to be put in. For that, government has come out with schemes which I will be touching. Already the speakers before me has told about digital empowerment and last mile financial inclusion, which government has taken a lot of steps backed by the healthy banks and also especially the public sector banks. Government's initiative to transform India is evident in a lot of initiatives like Gati Shakti National Master Plan for Infrastructure Development, and also this Atmanirbhar Bharat Mission. A lot of schemes have been dovetailed into these programs, and also government has announced a national infrastructure pipeline to kick off this infrastructure development, and also to generate funds. A national monetization plan also has been developed. So now we have to now ensure that the other sectors, the agriculture sector I've already told, but then the manufacturing sector has to improve. For that to happen, steps have been already taken, and the government is providing providing support in terms of capital expenditure, then reforms in sectors like infrastructure, manufacturing and telecom, and policy initiatives include cutting taxes, tax reforms, then performance incentive schemes have been there, already talked about that. Now, providing timely credit, especially to the agri and the SME sector, is very important in this revival phase. We have an agriculture credit target of 16.5 lakh crores, that is 16.5 trillion in rupees for the current year. And then this credit has to be given at the affordable rate also. And then we have to now induce farmers to adopt new technology, then mechanization and commercialization. These need to be done. So the Agri Infra Fund scheme, which Government of India has announced, is aimed at these things. That the share of farm income on the produce or at the consumer price has to be improved. For that to happen, farmers need to do the upstream activities of processing and such other things. For that, this Agri Infra Fund scheme is coming in handy. And one more thing is that there is the agri value chain. That is one important sector which NABARD also is looking at. So now, instead of viewing agricultural activities as standalone entities, we need to integrate that into a value chain and then provide necessary infrastructure for banks, both digital infrastructure as well as the technology, the information infrastructure for the banks to finance. Now, we need to now, along with the general infrastructure, rural infrastructure need to be there. For that, Rural Infrastructure Development Fund of NABARD is now augmenting its resources, especially to improve the healthcare, because healthcare is one thing which we need to do in the rural sector. For that to happen, a lot of investment in health infrastructure. So we have prioritized at the instance of the government to target health infrastructure in rural areas, so that the people are remaining healthy and employable, so that the productivity can be improved. So along with this, we need to now have a watch on the sustainable development, because now activity level is going to increase, but then we need to ensure sustainability. Already our Prime Minister has emphasized these factors, and then the most important thing, the poverty alleviation. Of course, recent indications are there are some states with more than 50% hunger index is also there. So the micro infrastructure approach is what we are now trying to make, area specific, and identifying the problems in those areas, and in a highly decentralized, smart, clean and climate resilient system need to be developed. That is what we are working for. And the agriculture sector, the water sector and the energy sector has to be augmented through these efforts. So as we go to the recovery path, the recovery need to be inclusive and it need to be sustainable. That is the motto with which the government is working. That's what I feel.
Wonderful, Shaji. That's one I so appreciate interacting with NABARD always. You have such a holistic view in terms of rural and national development, really working across so many sectors of the economy and households and businesses. I think you've given an incredibly comprehensive approach. And that really takes the discussion forward. So I'm going to come back to you, and then I'll for my second question, and then we'll turn to Santosh for his response. But so you've touched on this already in your first response, but in terms of focusing in exactly on financial service providers, who are a large part of our audience today, what would you say are the key priorities from public or private sectors, including the financial service providers themselves, how do we best strengthen those financial service providers to really help them rebound so that they can then in turn better serve households and small businesses?
Yeah. So here I would like to touch upon two aspects of these financial services. One is, of course, the previous speakers have told about the digital transformation which is happening in the financial services that need to be taken forward. And there need to be, the second aspect is that there need to be a differentiated response to the various problems which are now coming, because these are all new problems which are coming up. For that to happen, the differentiated response to be there. Touching about on the digital part, already the COVID pandemic has accelerated the transformation, and there are a lot of innovations coming in. And what is happening is that the production of financial services with implications on the structure of finance itself, we have seen that. And Mr. Vaidyanathan has already touched upon those aspects, how we need to do the last mile connectivity in a differentiated manner. So there has been a steep increase in access, but then there need to be some sort of confidence building measure in the users in terms of customer protection network. That is very important nowadays, because now they have to be sure about it, because they are not seeing the cash, the real cash, but then they are transacting in a digital manner. So they need to be reassured of the mishaps which are happening. So already RBI has come out with a lot of guidelines for that, but then we need to educate the people. So that is very important. Then of course for improving the confidence, there need to be connectivity issues to be solved, because rural areas are having connectivity issues. In that count, I can tell you the recent our experience on that, because we are embarking on a large scale project on computerizing the cooperative structure, the last mile, the primary agriculture credit societies. So one challenge we face there is the connectivity. So we have already in talks with Bharat Broadband Network Limited, who have been given the task of connecting 2.5 lakh panchayats with broadband network. Already they have achieved almost a 1.5 lakh. So another lakh of panchayats need to be connected. So that need to be there. Otherwise, there will be problems in the confidence of using the digital means. Else, what Mr. Vaidyanathan told, that they will receive cash and they have to carry the cash to the faraway branches, or they have to incur expenses at the BC centers for depositing the cash. So now there are certain critical gaps which I already told. The infrastructure, that payment infrastructure development fund, with Mr. Santosh has told, that is the way forward for improving the touch points at the nooks and corners of the country, including on the hilly and the northeastern regions. The connectivity I have already touched, but then that need to be ensured. Then the convenience and relevance of these products. So these procedures with which they have to be onboarded, a lot of simplifying acts have been there, but still there are some difficulty in understanding the products. For that to have, for making it very easy, we need to have the financial literacy efforts. We have at NABARD the Financial Inclusion Fund, through which a lot of financial literacy camps have been conducted. Then we are encouraging even the payment banks, the small finance banks who are having access to the remotest of the areas to conduct those activities. So now coming to the differentiated response, yes, the needs are different. So we need to structure the financial products along with these capabilities we are building on the digital front. So as I said earlier, the value chain approach, because now that the digital transactions are more, we have clear visibility of the cash flow which is happening through the system. So we can escrow these cash flows and make those who are inaccessible to credit, because now right now also almost 30% of the agriculture is now is relying on informal credit things. So we have to formalize that credit access to these 30%. For that to happen, most of these farmers are either leased land farmers, or they don't have the assets to show. But then they are producing, and then if it is connected to the agri value chain, and then their cash flows are being mapped, escrowing or through proper contracts, we can give them finance through the formal financial system. So that is one differentiated response we need to build up as we go ahead in ensuring inclusive growth. That's all.
Wonderful. Wonderful. Thank you very much. I think you've really flagged a number of key priorities across the financial sector. So now let's turn over to Santosh. Back to you for your response on the second question. Oh, no. Okay, well, hopefully he'll be able to join back in. All right, then, Shaji, I'm going to continue with my next question for you. And that is, the pandemic has triggered different impacts across the country, and very much, to use the word you just utilized, differentiated across urban areas and rural areas, and across different states, different geographies across the country. Of course, India is vast from north to south and east to west, and we would expect this kind of differentiated impact. How do you see NABARD's priorities for the agricultural and rural sectors? And you've already given a hint of some of these in your first answer, but to promote this hopeful economic recovery in 2022 and the sustainable inclusive growth that you've made reference to.
So now, if you see that, especially the agri and rural sector, the credit absorption capacity of the people have to be improved. That can happen only through meaningful infrastructure development. We realized that, and since 1996, we have been working on improving the rural infrastructure. And government also has created a fund within NABARD to provide at cheaper rates to the state governments to entice them to invest in rural infrastructure. So now what we did, as I said earlier also, that we have refocused our priorities in rural infrastructure. First thing, we fast-tracked those sanctions, which used to take around a month. We work closely with the government and also the public sector undertakings who are implementing the projects. And then we fast-tracked the decisions which are happening. And then we refocused these activities, one to health and then to education. These two sectors were given priority. Of course, the normal activities like road, bridges and all continued, but then we focused on health and education infrastructure because we felt that as we go ahead, there should be an inclusive growth and people should be healthy enough and people should be knowledgeable enough to be a part of this growth. Second thing which we did was the collectivization, because a lot of fragmented holdings are there. Even we started with the self-help group approach. So now we went ahead with the collectivization of the farmers, that to small and marginal farmers. So through the farmer producer organization. So if you see that NABARD is the front runner in that, and already around 4,000 farmer producer organizations have been in place now, and we have a target. The Government of India has a target of forming 10,000 new farm producer organization, of which almost 60% target is for the NABARD to have. So by collectivization, what we intended to is that to increase the income, the share of the price which a consumer pay, the share which a farmer receives have to be increased. So doubling farmer income is one thing, but for that to happen, they need to do a lot of upstream activities like this agro processing and such other things. So that leads us to the agri value chain approach, which earlier I touched upon. So what we are trying to do is that like the farmer producer organizations are being made as epicenters for this agri value chain, and they will be processing the surpluses, because earlier we used to have sustenance farming. Now it is a surplus farming because productivity has increased, production has increased, and a lot of marketable surpluses are there. But of course, because of the fragmented thing, we need to aggregate those surpluses. So if a middleman comes and aggregate, then the largest share of the price will be going to him. So we want these farmer producer organizations to aggregate these produce and do the primary processing, and if possible, the secondary processing also. Here, two schemes: one scheme of Agri Infra Fund, and the second scheme of primary agriculture cooperatives as multi-service centers. These two schemes go hand in hand, and we have converged these two schemes: the Agri Infra Fund scheme, where government is giving interest subvention, and also there is a guarantee for the loans taken by these farm produce organizations. And then the cooperatives which are at the last mile, they also do a lot of activities which a farmer produce organization is aiming at. So we need to now encourage them to do more such of those activities rather than doing the credit operations. So that is where we call them as multi-service centers. So along with credit, they should do other services like go downs, grading, sorting, processing, even retailing also at the village level. So under that scheme, what we give is that we give a concessional refinance to the cooperatives at 1% rate, which is subvented by Government of India, and then then we will encourage them to have a collectivized. Actually, at the field level, what we are doing is that nearby primary cooperatives are coming together and are setting up shared infrastructure. Like if one cooperative is setting up a go down, the other cooperative will have a processing center aimed at the processing the whatever is stored in this go down, so that there will be some mutual benefit for these two. And then the sixth point which we want is that we want to crisis proof the rural areas going ahead. So we want to build the core competencies and core capabilities at the field level. For that to happen, we need, I think within NABARD, we need a lot of analytical capabilities. So now we are setting up a data warehouse for actually aggregating the data in the rural and the agri sector, and then using that data for a lot of use cases which these rural people can use, and then we will form that as the base for the digital backbone for the agri value chain, because agri value chain is nothing but tracing the cash flows, and for that we need to have the analytical capabilities, a data warehouse in place. So we are embarking upon that also. Then the one part is that the guarantee. So FPOs, as you know, they are the new entities and there will not be any credit history for them. So banks will be reluctant to finance. Here, two aspects we have done. One is that we have set up our subsidiary. There is a NAPKISAN subsidiary which was encouraged to lend more towards FPOs to demonstrate to the financial system that FPOs are bankable. So if you see the number of FPOs assisted by any of the institutions, our subsidiary, which is the NAPKISAN, has assisted close to 250 FPOs, whereas the largest of the public sector bank, that is State Bank, has helped only in double digits, maybe 30 or 40. So we have shown to the financial system that FPOs are bankable, and then we have set up another subsidiary that called NAS Sandarshan to provide credit guarantee to FPOs. So that also we have set up so that any FPO accessing finance from any financial institution will be provided a credit guarantee through our subsidiary. And to sum up all these things, we need to now skill the people, rural people, which is very important, to be aware of these changes which are happening, and they need to be equipped for demanding those activities, rather than on the supply side we are doing a lot of such activities like providing guarantee or infrastructure we are providing, collectivization we are doing, but to create demand we need to skill those people to equip to use these supply. So for that skilling mission also we have launched. We have a micro entrepreneurship development fund for doing that. We are partnering with a lot of NGOs and also with the rural self-employment training institutes present in every district to do that. So this is what we are trying to do in the agri and rural sector going forward.
Fabulous. I think it's again a comprehensive, holistic approach in the agri and rural sector, on the demand side and on the supply side. It's I think really impressive, and once again the power and the influence and the tremendous good impact from NABARD. Let me switch back to Santosh. I understand he's been able to reconnect, and so we'll catch up with him now. And Santosh, I don't know at what point we lost you, but I was asking my second question, and for you to circle back on that. Oh, he disappeared again.
There. So briefly he was there.
Oh, this is why we need better connectivity.
Yeah. This is the issue. Sitting in Mumbai, we are facing this issue. Means you can think about.
There you go. There you go. Well, Shaji, then I want to continue with you and just probe something you mentioned now twice in terms of the role of the agricultural value chain. Yeah. And specifically around financial services providers. So the SHGs and federations, the MFIs, the NBFCs, the payments providers, the banks. I mean, it's just such a panoply of financial service providers across the country. What do you see in terms of how they could get involved? What are the opportunities for them to get involved in the agri value chains?
Yeah. So now the traditionally, no, we will be financing such activities in the agriculture on a standalone basis, as I said earlier. Like production credit is what we are doing now primarily. If you see the split up of around 15 trillion rupees, which is being dispersed in across India in a year, almost 80% will be the short-term finance, which is meant for crop production. That is under the Kisan Credit Card scheme. So we need to now innovate on these schemes. So now Kisan Credit Card, of course, around 14 crore farmers have been registered for that, of which around we have reached around 8 crore farmers. There is a gap, of course, it is there around 6 crore is what we need to now bridge. But we need to innovate also, because even the NPA, that is non-performing assets within the KCC, is very high. So that is because of lack of linkages. That is where this agri value chain approach will be helping on. And we need to add products to this KCC, because now the production, once production happens, they need to be stored. For that, warehousing and warehousing will be there, and for that there need to be a finance, a working capital finance. So already there's a product linked to KCC, but that needs to be now re-emphasized. And then one more thing we did was that we have geotagged all the warehouses in the country. Close to 1.5 lakh warehouses have been now geotagged. And then on a remote basis, we will now know which all warehouses are there, what are their facilities, and what is their vacancy position, and which is the warehouse nearby. So this the supply is now there. Now the demand need to be created in terms, as I said earlier, farmers need to be aware of these things, and then they should store and then process. So for that to happen now, the value chain approach which we are talking about, so there should be a digital backbone for that. Physically, yes, the aggregators are coming, and then downstream financing, which is now happening. But it has to be now formalized, and it has to be ring fenced for risks which are there. So for that, there should be more of market linkages. Already we are working with NCDEX for price discovery, and also tying up with the futures and also options, derivatives on this on the prices, and so that there will be an assured income. Recently, we have seen how the tomato prices crashed because or rather tomato prices increased because of the supply chain shocks. But then had they done the price discovery beforehand, this situation would not have been happened either at the producer level or at the consumer level. So we are working on that, those things, and added to that, we need to create infrastructure for that. We are prodding state governments to invest public investments in creating rural infrastructures like godowns, or access to those infrastructures in terms of road, and then the private infrastructure in terms of the agri infra fund scheme is there meant for that. So the credit can be accessed at lower rates because there is an interest subvention, and banks are directed to lend not above 9% for that. And then there will be an assurance from the government in terms of guarantee for such loans. The credit guarantee is available through the CGTMSE, that is the credit guarantee fund set up in the SIDBI. So we have ring-fenced those activities, and banks are encouraged to lend. Only thing now is that there need to be a demand for such products at the field level. So the performance under this agri infra fund scheme is not that encouraging so far. But I understand these projects are long gestation projects where a lot of clearances need to be there, because the critical infrastructures are getting created, and the real infrastructure, they need to have land, then the building permits and such other things. It may take time, but they are in the different stages of setting up. I'm sure within a year or year and a half, proper infrastructure will be there, and then the better price realization will be happening to the farmers.
Fabulous. I agree. I think tremendous opportunities in agri and the broader supply chain, value chain, finance opportunities in a number of sectors. And again, NABARD is helping lay the framework, lay the groundwork for the infrastructure, and to help connect with the financial service providers. All right. Well, I am delighted that I think Santosh is back online. I think we can say that. We're so happy to see you again.
Thank you, Jennifer. Sorry, I had some internet issue.
No worries. We were just talking about the need for connectivity across the globe and certainly in India. And so there you have it. You've helped demonstrate the case. But I don't know at what point we lost you. And I was asking question 2, and it is to really bring in both the public and the private sector. How do you see the needs from both sides to help strengthen financial service providers so that they in turn can better serve their clients, whether they be households or small businesses?
Okay, thanks, Jenny. So I'll just briefly mention on that particular point. So a very critical element of the economy that urgently needs to function well in order to facilitate India's strong and sustained recovery from the pandemic is the financial system. This is very clear to all of us. And I have few areas that I really would want to focus on where this will really help us, and it will help India also reach that $5 trillion economy in the future. That's something that we are planning to be. So one is to instill a physical discipline in handling all COVID-19 related implication. We have to strengthen certain reforms. One would be the financial sector stability, where RBI's continued focus on risk-based regulation and supervision will be important. Very, very important, to play a very important role. Then there should be reforms in the non-banking finance company sector, NBFC sector. We should be able to support them so that they'll be able to channel more credit to the segment which requires this kind of funding. There should be deeper market reforms. There should be role of fintech. Fintech should play a very important role in ensuring that credit is provided to the required sector. Also moving to a more strategic public sector footprint. So whatever the government is recently doing, like consolidation of public sector banks and strengthening of corporate governance, these are encouraging steps towards a more strategic public sector footprint. So this is my views on few of the points that we should focus on in this area. Jennifer.
Excellent. All right. Well, thank you. I think you've identified several key priorities, and I think especially from your perspective at MasterCard, really seeing the role of technology, the role of the broader financial infrastructure and payments, but how that can influence across the financial sector. So let me follow up with another question for you, since we lost you for a while. Clearly, around the world and definitely in India, we're seeing the usage of digital financial services accelerating massively during this pandemic. And that's obviously driven by lockdowns, restrictions on mobility, and a need. So usage has increased. It's something that we've all been anticipating for a number of years, and the pandemic has accelerated the whole process. So what do you see as the priorities for financial service providers, or the broader financial sector, I should say, to really offer more responsible and inclusive digital financial services?
Okay. Again, I've got some points that I wanted to share with the group here. So financial technology has the unique capability to extend financial inclusion to all, and it can really improve the lives of people across the country. Few things that they can do is it can help bring gap in the traditional methods of doing business in the financial services space. I'll elaborate on that later on what we are doing in this space, Jennifer. It can also deliver financial services to the underserved and unserved markets, which can lead to disruption in across industry. The other thing for financial technology to be, be successful in the last mile, it is very important to drive acceptance. It is very important to drive adoption, and that can be made possible only if technology is affordable and accessible. Technology clearly demonstrates the benefit it will bring to the lives and of people and to the businesses, and technology should be convenient to adopt and cause minimal disruption, and technology should be dependable and trustworthy. So these are some of the thoughts that I had on technology. And also, to expand the reach of financial services, fintechs must focus on building trust, and that can only happen by doing a lot of training, education to the small businesses, because they need to be comfortable to use technology. All these years they have not been using technology, and they've been using, like Mr. Vaidyanathan mentioned, it was all cash transactions. How do they move to the digital space? So a lot of training is required, a lot of handholding is required it is important to build this trust, and also the fintech should be able to offer flexible credit to the target segments, to the SMEs, and these are two areas that I feel are very important, so that technology is adopted by the segment that actually requires them in this time.
Excellent. Excellent. I think this need for flexibility and differentiated responses is truly important across all financial services and geographies. So thank you, Santosh. I'm going to turn to some of the questions from the audience that I'm seeing come in. And a big thank you to those of you who are sharing questions for our panelists. We have 3 that have come in so far. So let me read out the first, and then we'll see if either of you would like to tackle that one. And it relates to the first part of our panel. The question is, how do you see the effectiveness of the government's various packages and strategies for helping reboot the informal sector, improve competitiveness of local markets, and build the resilience and preparedness to cope with shocks and emergencies? Is there more that could be done? So clearly acknowledging what's already been done, which is significant. How do you see that, and what else could be done in addition?
Yeah, so can I take that?
Please.
Yeah.
Shaji, yeah.
So the government has clearly done a lot of efforts to encourage not only their own investments to happen and turn around the sector, but also partnered with financial institutions as well as with the private sector. So now coming to the financial sector, because whatever packages they have announced was mainly through the financial sector, like emergency credit lines, so that the banks are encouraged to lend. Government, the sovereign has taken the risk, whatever may happen at the later stage. So the infrastructure development, which was intended, yes, because it is a long-term process. Clearly, there are turnarounds, but then perceptible changes will happen in the due course, because there are a lot of things which are work in progress. Now the banks are now encouraged to lend. That there is no single different opinion about that. Though, but then if you see the incremental credit deposit ratio, the ratio has come down, not because of lack of availability of credit, but because of the people parking a lot of funds with the bank. Those deposits are growing at double digits, whereas the credit demand, though muted, it is there. So now there need to be a sustained effort to improve the credit. For that to happen, the monetary policies are now supportive, but fiscal policies are now working for that to happen. So the credit absorption capacity of the people need to be improved, and people should be encouraged. The private sector should be encouraged to invest, and there should not be any fear that any other impact will be there on the local. That's why when the second wave came, the country didn't go for a lockdown to assure that we will not stop the economic activities of the people, but then we'll try to improve the vaccination, we'll try to improve the health infrastructure, and precisely for that, RBI has announced a separate window for health-related infrastructure creation. Some subsidized financing were given. So all these things should now result in improved activity. As I said, now the supply is there, now the demand need to be there. So it has to be a cycle where money should be there in the hands of the people. For that to happen, this rural employment generation program and also the food security programs which government is augmenting, these will be giving a lot of money, surplus money at the hands of the people. Otherwise, this money will be spent on food and such other activities. So the demand will be there, and this will encourage more investments. So that means the manufacturing activity has to improve. The cycle has to now kick in, and it will kick in soon.
Great. Jennifer, I'll also want to add one point to various various support that the government has provided. One I would like to highlight is for the street vendors. Last year, they announced a PM Swanidhi program where the street vendors would be given 10,000 rupees loan, and the kind of support the government was giving, the private sector also came into play. The idea was, because of lockdown, these people were really impacted. There was nobody going out and doing any purchases with them. Nobody wanted to do cash transactions, so governments encouraged them to get into the digital ecosystem so that they could accept QR transactions, and they had they could get into the digital space. So this gives confidence to the ecosystem. This gives confidence to the people, the poor people, the SMEs, the street vendors, and it also gives confidence to the lenders that yes, if government is backing such programs, we should also participate and ensure that we make the livelihoods better for these people. So
terrific. And I think building confidence in the systems and in the
That's right.
services is really a key piece of all of this, so that usage will continue to grow. Okay, so a second question that's coming in now from the audience. And Shaji, it's directed towards you. It's asking from NABARD's perspective. While NABARD's FPO focus in recent times is well placed, is NABARD working towards a window for creating some role model FPOs with all ecosystem agents actively participating?
Yeah. So here, in the FPO space, NABARD is doing multifarious activities. One is, of course, they are encouraging people, farmers to come together to form FPOs. Already around 4,000 FPOs have been formed, and another 5,000 is on the annual. So now, another thing what we have done is that we have created a model for the banks to follow, so that they can lend, how they rate the FPOs, what all things they should see while lending to FPOs. So it is like a toolkit to the banks. So what we have done is that, based on our experience during the last, say, 5 or 6 years in FPO formation, what we have developed a toolkit and shared with the Reserve Bank of India, and Reserve Bank of India in turn has circulated to all banks, so that when their FPO reaches the bank branch for any activity, there should be no doubt about the assessment. There are clear guidelines for that. That is one. Second, the third part was that we, as I said earlier, we encouraged banks to lend, and then we have shown that FPOs are creditworthy people. For that to happen, our own subsidiary, as I said earlier, around 250 FPOs have been financed. So banks are now looking at our model to finance them, and then we are encouraging capacity building for FPOs in terms of training for the CEOs and the training for the board of directors of these FPOs, because most of these FPOs are registered as companies. So we are actively partnering with institutions to handhold them. And then we are now creating the infrastructure, the processing infrastructure for that. As I said earlier, the multi-service centers, which we are trying to build through the cooperative model here. So that will help FPOs to use those facilities for their income generating activities. And then the guarantee part. The guarantee part is there to encourage banks to lend, because even if some business loss is there, whatever exposure to FPOs will be protected in terms of guarantee. That also we are working on.
Excellent. Again, a multi-pronged approach from NABARD, really building out the various pillars in a very holistic manner. Okay, so the third question that's coming from the audience, and I'll open it up for either of you or both of you if you'd like to respond, is we've referred a few times now in the conversation this morning to given a differentiated response. So the question is, given this principle of differentiated response, is there a focus on informal spaces in urban areas and informal sectors more broadly, especially those in manufacturing sectors for productive loans or productive usage, let's call it, of financial services? It could be payments, it could be value chain finance, etc.
So in the urban space, informal sector, the earlier one scheme was mentioned here, that the Swanidhi scheme, that is aimed at giving formal finance. That is, institutions, banks should give finance to the street vendors. That the PM Swanidhi scheme, which is some sort of an formalization of the informal sector. But at the manufacturing level, of course, the SMEs. So now what we see is that the credit is there, but then whether adequate credit is there, and the credit which we have given through the financial inclusion approaches, the accounts were opened and credit was also the second pillar of that. But there need to be a lot of things to be done. So first cycle of credit which we have given is largely utilized for their consumption needs. Now they should graduate into some micro enterprises. But again, one problem will be there, no? The preponderance of micro enterprises will be self-defeating because the quality issues, whatever the production they are having may not have the sufficient quality, or they may compete with an existing micro enterprises which is successful, but with a substandard product, they will come up and destroy whatever the profits are available for the existing micro enterprises. So we need to now aggregate this micro enterprises. That is what we are trying to do. The collectivization of micro enterprises at the urban and the rural level. That need to be there so that they will be complementary rather than competing with each other, or helping them to graduate to small enterprises with a larger target audience or larger sales and such other things. Some sort of more investments need to be given. So there we need to augment activities. It's a part of financial inclusion, but then it is the next stage of financial inclusion, the credit stage, which has to be augmented. Still, a lot of formalization need to be there for in the urban and the rural sector in terms of the credit delivery. So that activity also we need to do. A lot of job is to be done in the both in the urban and the rural sector. Yeah.
Fully agreed. A lot of work yet ahead. Santosh, would you like to come in on this question?
Yeah, Jennifer, I'll take this question also, and I just wanted to touch upon some work that we are doing on the MSME side, on the Kirana side also, because I missed because of the internet issue. So on the Kirana side, I'll just highlight that we have been seeing that there is a lot of challenges these small Kirana stores face today because they are small, and banks or acquiring partners do not want to give them a POS terminal. We all have a vision that they should get digitized, they should be in the digital ecosystem, but they're so small that it doesn't make sense for a bank to provide a POS terminal for them to start accepting cards. And also they have other challenges, like they don't have any kind of recourse, they don't have collateral, they don't have any assets where a lender is comfortable lending them anything, to grow their business. So what we are working a model which we had launched in Africa sometime back with the Unilever Group called Jasa Duka, where based on the sales data provided by the FMCG company, which we provide to the lending institute, that acts as a surrogate, and based on that, a credit is provided to these small Kirana stores. So that's something that we are working on in India. We're working with a lot of partners here, with the lending partners and FMCG companies, to ensure that these Kirana stores get credit, and that becomes a formal kind of lending that they get from these lending institutes. The second thing is we are also working for them to get into the digital acceptance space, to give them a more economic version of a POS terminal. So we call it a soft POS, where the merchant can download a software on a smartphone and he can start accepting cards. He doesn't have to have a POS terminal. He can start accepting any network card. He can start accepting QR, and that way he gets into the digital ecosystem. He has a history of transactions that he's doing that helps him speak to the lender going forward and ensuring that he gets good credit and he can grow his business. So those are things that we're doing in this space to ensure that these marginalized Kirana stores are also in the digital ecosystem and they get a credit. Yeah.
Terrific. I think that's a really good example of the power of payments and bringing the Kirana stores and other small businesses into the broader economy. Yeah, and into the broader financial system and broader economy. Terrific. That's a great example. Shaji, we have one last question from the audience, and it's again towards NABARD's work with FPOs. The question is, we have more than 10,000 FPOs across the country. Do we have data on how many of them are active? The FPOs that have received loans from banks seem to be relatively few. And your comment?
Yeah. So the 10,000 figure which the person has asked, it is the target, the new FPOs which government is targeting at. Right now, we have close to around 6,000 FPOs which have been there, of which close to 4,500 is by NABARD. So now, coming to the credit linkage of these FPOs, yes, the question is correct in telling that the credit linkages are less. As I said, banks were initially reluctant because these are all the new areas and they don't have a credit. The FPOs don't have a credit history and they are new entities just registered. So that is why precisely government wants to give confidence to the lenders to lend to FPOs. There, this guarantee product, the credit guarantee, which I mentioned earlier, will now entice these lenders, because once the credit guarantee is given, it is a sovereign guarantee. So risk weight for such loans also will be less. They need to provide only lesser capital for such loans. That will lead to a lesser cost for such loans, and also the credit risk is now ring fenced, because when some untoward incident happened and the loan is not getting repaid, banks are saved through the guarantee. So now we need to increase the credit linkages of FPOs. There is no doubt about that. For that to happen, we are working closely with the banks. That is where I told about the toolkit which we have developed for the banks to use to follow the procedure and give the loans. Once they follow the procedure and give the loans, this will be automatically covered under the credit guarantee. So banks need not worry about the recovery aspects of that. So yes, right now the linkages are less, but going forward, we are going to see a lot of turnaround in this credit linkage as well.
Thank you very much. Okay, well, I'm going to try and give a few threads as under guise of some type of summary here, but I think we've had an incredibly rich discussion. So this will be my best effort. Please bear with me here. What I'm hearing from both gentlemen and from our opening speaker, Mr. Vaidyanathan, is that it really feels like you believe, and I sincerely hope this is true, that India is turning the corner on the path of recovery, and we're coming back to whatever is going to be the next new normal in our economies around the world. You've both given a number of examples of the tremendous public sector response and the private sector resilience and effort during this pandemic and the response that we've all been living through. In terms of some of the needs going forward or the remaining challenges, we've talked about, and some of the catchwords that I've heard both gentlemen use is democratizing digital financial services. Clearly, COVID has accelerated usage and the transition towards digital financial services. And how can we further encourage uptake, confidence in the system, and really building on the payments infrastructure that is remarkable. I mean, seriously, what NPCI and RBI and the private sector have done across payments in India is a remarkable story. But we also need to continue building true rural connectivity, and it's sometimes urban connectivity, as Santosh has helped us prove today, but also other opportunities that we're seeing is the second point around building on market linkages, really linking small businesses, whether the Kirana shops or other businesses across various economic sectors, linking them into the payments infrastructure and being a gateway into broader financial services and economic growth. We can use supply chain finance, trade. There are a number of different angles to go about this, but to really help bring in financial services along agri and other value chains and bringing in those small businesses. A third area is to really help stimulate job recovery and investments. This is clearly a role for public and private sector, and in the public sector side, certainly fiscal and monetary policy. And a fourth area that we've talked about is differentiated responses for financial services, greater segmentation, greater nuance in terms of designing and offering financial services, whether for a range of households and individual clients, as well as a range of business size across India's vast and differing geographies, again, south to north and west to east. And the last point I'd like to mention, again, about building confidence and usage in the system is really customer protection, customer recourse, and adequate customer privacy measures so that people really have that confidence to use and benefit from and expand their household assets, their business assets, and wealth, and increase their own household and business resilience. So what I hear from the panel, and I certainly share a tremendous optimism for the future, for inclusive, sustainable economic growth across India. And I would like to offer my deep appreciation for your perspectives, both Shaji and Santosh. I think you both bring tremendous experience and perspective to these questions that we've just been addressing. So I'd like to thank everyone for participating. I think with the opening session that we've just heard, and then our second session, I hope we've helped get the summit off to a good start, and I really wish everyone well for these next 2 days. And I would like to give a special appreciation to Vipin and Priyamvada and the full Access team. I've been participating in these summits for a number of years, and you've been organizing them even longer than I've been participating, which is since 2009. And you do a tremendous job organizing this absolutely critical summit for our sector, financial services. So thank you, and I'd like to turn it back to Priyamvada for some announcements.
Thank you. Thank you so much, Jennifer.
Thank you so much, Jennifer. And you're right, this is actually the 18th year of the Inclusive Finance India Summit. So thank you panelists so much for this very important discussion. And special mention to, of course, Jennifer for such deft moderation. We had some challenges with technology and, panelists dropping off, but thank you so much for this. And I think this was a very important discussion to set the overall context for the summit, which is building financial resilience strategies for revival, which is this year's overall theme for the summit. So thank you everyone. Thank you audiences for joining in. We had 287 people logged in for this particular session. So with that, we move on to our next sessions, which we break away into the thematic tracks. So we have Hall A, where we will be hosting bolstering the pace of the pyramid, building better with microfinance. Hall B will be hosting building community capabilities, new economy aids for financial inclusion. And Hall C will have the track on catalyzing capital, impact investment and financial inclusion. I request the audiences to please log in to the tracks of your interest and hope you find the sessions insightful and important for you. Thank you so much.
Thank you.